Hello and welcome to another Lincoln property blog, brought to you by Ben from Walters of Lincolnshire. This week we look at, is it a buyer's or seller's market? Are you considering moving home in Lincoln during the next 6 to 12 months? You may be a Lincoln landlord deciding whether to grow your portfolio or sell off a few properties. Or you're a Lincoln first-time buyer wondering if now is the right time to move. Understanding whether the current property market favours buyers or sellers is key to making the right call. If you follow my regular Lincoln property updates, you'll know one of the most reliable ways to assess the market is by looking at the percentage of homes marked as sold subject to contract, or under offer, compared to the total number of properties on the market. Let's show that in practice. In this example, if there are 400 properties on the market in a location, and say 300 properties are for sale, fully available to buy, and the remaining 100 are under offer or sold. 100 as a percentage of 400 gives us a sales percentage of 25%. It is this percentage that strongly indicates the local property market temperature and who holds the upper hand, i.e. buyers or sellers, or somewhere between. This percentage figure acts as a barometer for market conditions and can be analysed using these splits. Extreme buyer's market, 0 to 20%. Buyer's market, 21 to 29%. Balanced market, 30 to 40%. Seller's market, 41 to 49%. Hot seller's market, 50 to 59%. Extreme seller's market, 60% plus. How does Lincoln compare? Examining historical data from the advisory's website, which has tracked this metric for years, reveals some key trends for each month in 2025. For this exercise, Lincoln is LN1 to LN6. January 2025. 33% of homes were marked as sold STC or under offer. This placed the market in balanced market territory. February 2025. 34% was recorded, a slight increase on January, maintaining balanced market conditions. March 2025, 35%, a further small rise, keeping the market balanced. April 2025, 33% was recorded, a drop back from March, though still firmly within balanced market territory. May 2025, 33% was unchanged from April, suggesting stability in a balanced market. June 2025, 35% was recorded, a modest increase that sustained balanced conditions. July 2025. 34% showed a slight decline compared with June, though again still balanced. August 2025. 37% was recorded, the highest figure of the year so far, showing a balanced market with a little more activity in favour of sellers compared to earlier months. Overall trend, Lincoln has consistently sat within the balanced market range, with figures fluctuating between 33% and 37%. The shifts month to month have been minor, pointing to a stable environment where neither buyers nor sellers hold a strong advantage. For interest, if I break down the August 2025 figure by individual Lincoln postcodes, it actually tells an even more interesting story. LN1, 33%. LN2, 43%. LN3, 35%, LN4, 30%, LN5, 41%, LN6, 40%. Look at the difference between the postcodes. So what does a 37% sold subject to contract to total stock ratio mean for Lincoln right now? It places the local market at the upper end of a balanced market, leaning towards a seller's market. Neither side is in complete control. Negotiations are tighter, and both buyers and sellers need to bring their best game. For Lincoln sellers, we are firmly in a market where patience, presentation, and accurate pricing matter more than ever. Buyers now have a choice, a lot of choice. Simply listing your property and hoping for the best will not cut it. The homes that sell are those that hit the market with the right price from day one, have high-quality photography, clear floor plans, strong virtual/video tours, and marketing that stretches both online with paid social media posts and offline. Overpricing is the fastest way to stall a sale. Properties that linger usually face price reductions, lose momentum, and invite lower offers. In some cases, that even leads to failed sales before the exchange. Getting it right at launch is critical. The good news is the recent interest rate cut provides a welcome tailwind, as first-time buyers are seeing lower monthly payments, encouraging more of them into the market and strengthening chains. Also, home movers can access better fixed-rate deals, helping them upsize, remortgage, and release more homes onto the market to buy. Finally, buy-to-let investors in Lincoln's stronger-yielding areas may see the sum stacking up again. Buyer sentiment is shifting. Rate cuts show the Bank of England wants growth and stability, which converts hesitant wait-and-see buyers into active let's book a viewing buyers. This is not a one-off. The cut follows earlier reductions since late 2024. This means mortgage rates are more palatable, with some 2-year fixes, at the time of writing, being below 3.75% on a 60% loan-to-value basis and an impressive 3.86% on a 5-year fixed, 60% LTV. For first-time buyers with a 5% deposit, a 3-year fixed 4.78% rate on a 95% LTV mortgage looks pretty fair. For Lincoln buyers, the market is calmer than the frenzy of 2021 and 2022. There is time to think, compare, and in some cases negotiate. That does not mean you can wait indefinitely or fire in lowball offers. The best homes are still competitive, but opportunities exist if you are open-minded and look beyond the most sought-after postcodes. Have your mortgage agreement in principle ready before making an offer. It sets you apart and gives sellers confidence. Also, consider widening your search area, as value is often found just beyond the obvious hotspots. Final thoughts on the Lincoln property market. With inflation rising slightly, meaning interest rates won't be coming down too much in the near future, and the government finances looking a little squeaky, while the UK's and Lincoln's property market is enjoying a steadier footing. Realistic pricing is the ultimate and most important thing in marketing a property. Remember last month, only 50.9% of homes that left estate agents' books ended up being sold and the homeowner moving, the rest being withdrawn from the market, unsold. Of course, you might not get what you would have got a few years ago in the crazy years of 2020 and 2021, but the price you'll have to pay on the next one won't be as much either. I would love to hear your thoughts on where you see the Lincoln market heading. Just one last piece of news. We're thrilled to announce that Walters of Lincolnshire is now a proud member of the Buy with Confidence scheme. And we're the first and currently the only estate agent in Lincolnshire to achieve trading standards approved status. This means our business has been rigorously vetted for honesty, transparency, and outstanding service. For our clients, it's extra peace of mind that you're dealing with a team who puts your interests first every time. Thank you for your continued trust and support. We're raising the bar for estate agency in Lincolnshire, and we couldn't do it without you. For more insights and information, visit the Lincoln Property blog, brought to you by Ben from Walters of Lincolnshire at www.walters-property.com/blogs. Until next time, take care. If you would like a chat about where you sit in the current market, do not hesitate to give me a call on 01522 512 513 or drop me a message on social media. To ensure all our clients get the absolute best experience and a total marketing strategy as unique as their homes, we only list 20 properties per month. Our September and October market appraisal slots are now available to book. We ensure that you are always a name and not just a number with Walters.